The Bitcoin, BTC, and broader crypto market failed to recover higher and returned to the sell-off on Thursday, after a brief rally following the U.S. Federal Reserve's Fed announcement on Wednesday that it had raised rates by 75 basis points, its largest rate hike since 1994. At 1448 UTC, Bitcoin stood at $21,000, down over 1% for the past 24 hours and 31% for the past 7 days. At the same time, Ethereum, ETH, was almost unchanged in a day and down 39% for the week to $1.105. The losses on Thursday came after a brief relief rally in both BTC and ETH Wednesday, as market participants digested a largely expected 75-point rate hike from the Fed. From a low of $20.111 on Wednesday morning UT time, BTC rose more than 12% to reach close to $23.000 before once again giving back most of the gains. A similar story also played out in the ETH market, with the token climbing from a low of $1.014 in the morning to more than $1.250 shortly after Fed Chair Jerome Powell had wrapped up his press conference, a rally of more than 20%. According to Nicole Morge, executive director at crypto hedge fund ARK36, the old mantra of "don't fight the Fed" has never been more relevant than in recent days, with fears about rate hikes largely responsible for driving down crypto prices. Still, Morge noted that it appears that last week's high inflation reading for May in the U.S., combined with recent comments from the Fed, had already spooked investors so much that the 75 basis point hike was largely priced in by the time it was announced. It now appears that we can expect the BTC. Similarly, Marcus Sodero, an analyst at crypto broker Global Block, said in a commentary that Wednesday's brief Bitcoin rally following the rate announcement came because traders were already prepared for the hike. However, he added that the market has cooled off slightly since, and warned that there could be more downside ahead over the next few months if the rate hikes end up causing a recession. A recession would form a macro environment that is poor for global markets, specifically crypto. As people have less money to spend on essential items, they may have less capital to invest in risk-on assets like crypto and equities, Sodero wrote. Meanwhile, many of the leading voices in the crypto community on Twitter shared cautiously optimistic takes after Wednesday's rate hike. Among them was Ryan Selkis, founder of crypto analytics platform Messari, who said he thinks the bottom might be in. He explained that even though the Fed was aggressive, the hikes won't be enough, and they can't go too aggressive or they'll crush the economy and budget.